everyone, and thanks for joining us today. On behalf of the New York State Federation of Lake Associations and the Syracuse University Environmental Finance Center, welcome to the webinar today on insurance coverage for nonprofit lake associations. This webinar is part of a series aimed to assist New York lake associations and local government leaders to grow their skills for better lake management. The resources and strategies discussed today can be adopted by lake associations to find the right level of insurance for their nonprofit organization. The New York State Federation of Lake Associations, also NISFOLA, is committed to reaching our membership with important information. As it is for all organizations during this time of physical distancing, NISFOLA's state and regional conferences have been canceled. While opportunities to learn and network cannot be fully replaced, this webinar series does provide you with the opportunity to stay connected and continue to provide important information to our members. If you have any questions about NISFOLA, please contact Nancy Mueller at the contact information provided in the bottom left-hand corner. You can also visit the website at nysfola.org for more information. We could not provide these webinars without our co-sponsor, the Syracuse University Environmental Finance Center. For a little bit about the Environmental Finance Center, the team enhances the managerial and financial capacity of regional and local governments, nonprofit organizations, and local residents to improve environmental infrastructure, services, and quality of life. Our partnership with FOLA for this webinar series is supported under a grant by the Rural Utilities Service of the United States Department of Agriculture. And we also welcome you to join NISFOLA and the Environmental Finance Center for our future webinars. Webinars will take place on Thursday mornings from 10 to 11 a.m. throughout the months of June and July. Registration is now open for all of these webinars. Please visit one of the websites listed at the bottom of this slide for registration and more information. And during the webinar today, everyone will be kept on mute to ensure audio quality. If you have a question, please type it into the GoToWebinar question dialog box at any time throughout the session. We will be holding all questions for a Q&A at the end of the presentation. We will also be posting the presentation as well as a video recording on the Syracuse University Environmental Finance Center website. You can reach that website at efc.syr.edu. You will be receiving a follow-up email that includes a link to all of these materials. We do not submit our webinars to licensing agencies for pre-approval of continuing education or training credits. We will be providing certificates of attendance as a courtesy. It can take 1 to 2 weeks to send out the certificates of attendance, and you must attend this entire webinar to receive one. You must have joined this webinar using the unique join link that was emailed to you when you registered in order for us to count your attendance. Again, we cannot guarantee that this webinar will meet requirements for specific CEU, training, or license renewal needs, but if you have any questions about this, you can email us at pclark@syr.edu. And on that note, I would like to introduce our speaker for today's webinar. We have Brian Martin, licensed account representative at Counsel Services Plus Incorporated. So Brian, at this time, I welcome you and I pass everything over to you.
All right, great. Thank you, Savannah. I think on my end, we are ready to go, so hopefully no glitches. Want to thank our sponsor and co-sponsor on NISFOLA and Environmental Finance Center of Syracuse University, as well as all the attendees today. Hope you all find this presentation, informative and helpful. I'll be commencing the presentation in just a moment. I'll finish up, and when we do, we'll take questions and comments and things like that, and review some things that were previously posted, and have some time available for that. Also, anyone can feel free to touch base with me for more higher level, personal matters, and set up some one-on-one calls My information is certainly noted here on the slide. Email is probably best to start with, and set a time accordingly. So we'll jump right in here. So yeah, I'm Brian Martin. I'm with Counsel Services Plus. We're based out of Albany, New York. And per the next slide, hope you enjoy the picture. We find insurance really exciting, so I hope that conveyed. So a lot of you probably are asking, who is CS Plus? And I can tell you, a lot of people, when they come to us, they don't necessarily already know of us. We are a very unique broker, and we have just a kind of different situation in how the rest of the industry works. We deal with a lot of the same, insurance items, benefits, and liability. We're all duly licensed, which is nice, so you deal with one agent. But more specifically, Counsel Services Plus is the insurance subsidiary of the New York Council of Nonprofits. They may actually ring a bell more so than Counsel Services Plus. So we work with nonprofits exclusively. Some of them are much larger in size. They have a few $1 million in their budget. They have more complex needs. We operate for their services can be both ends of the license, health insurance, dental, all the way to general liability, directors and officers, and professional liability coverages. But for the most part, the majority of our clients have $1 million budget and under. And by under, I mean like well under to $10,000. We have people who've been operating for some time without insurance, and they finally come to the table and they're just considering, what should we be thinking of? We may not have a whole lot of risk exposure. We don't think we'll get sued, but people are more risk management savvy than ever. And these nonprofits who typically haven't had insurance are reconsidering, or those that have had the basics are, kind of doing reviews, contacting another broker, and thinking about what else is important. So we're also a little different than the rest of the industry in that we don't work off of quotas. We don't cold call. People know our name. We've been around for 20 years as a subsidiary of NYCON. New York Council of Nonprofits has been in existence. They're a statewide association for just over 90 years. So people know our name. They come to us. It's slow and steady growth. We're very customer, focused, and it's a little bit of a different model. And the rep you deal with is, your rep moving forward. There's service people available, but you don't kind of get thrown to an 800 number and your rep disappears off to the next job. So that's a bit about us and what we're doing out there. This is a quick synopsis of what we'll be going over today. I'll let you all take a quick moment to see what that is and then get into the details. Okay, so considering the first bullet point, why consider insurance? First off, statutory obligations are an important one. And with the crowd we have today, we might have a majority that are volunteer-based and don't have employees, but for those that could be in a position to at some point hire an employee or may have employees, you have 3 requirements in New York State. One is workers' comp. It's on-the-job injuries. The other is disability, and through your disability carrier, I'm sure you've heard about it, you'll have your paid family leave coverage as well. That'll be your off-the-job injuries, and paid family leave provides some benefits for, some other factors, a death in the family, taking care of a loved one while sick, some other matters as well. And then you have your unemployment insurance. The most typical way that people meet their unemployment insurance is through a payroll tax. So where with workers' comp and disability, you're seeking out an actual carrier and you're purchasing a policy. Unemployment, you're dealing with your payroll tax. Now, as a 501c3, if you are, you're paying into the state unemployment tax and not the federal unemployment tax. So as a payee, that's how you have that insurance coverage. So those are your 3 statutory obligations. Then you have other obligations, legal obligations, for instance. So you can see their funding contracts. If you have a funder, It's very typical of them to require general liability at the very least. And then depending on the specifics of the work involved per that contract, they may require other things, directors and officers coverage, if you have exposure with children, abuse coverage, if you're providing a professional service, professional liability. But again, general liability is the standard. You have event contracts. We have people that will come to us where for 10 years they've been using a facility who has never required insurance of them. And all of a sudden they say, to use our facility, you must meet our contract requirement, which involves having insurance. And again, general liability. So we'll end up with new customers and walking them through the process A to Z of what insurance means and what they need and helping them out with their certificate of insurance simply due to that factor. And then another common one is leases. Landlords are and traditionally have always required of their tenants, general liability, again, at the very least. And they need a certificate of insurance showing that, and that is another way we assist people. So the next piece here for insurance, best practices. I think this one in this day and age goes without saying, preserving assets. When you fall on hard times and you're hoping a carrier is going to cover your claim, but there could be other things you're spending money on, potentially crises management, contacting people to reach out to the public, keep your name in good fashion. There could be a multitude of things, but preserving assets is certainly an important one. And I understand we're dealing with nonprofits where the budget doesn't make available money that is just never ending. It's probably pretty limited. What you have, you use. You may have a little left over from year to year to work with. So you do your best along those lines. And certainly when I speak with anybody one-on-one, we can discuss that a bit more. Another best practice, attracting donors, staff, and board members. What I've found in the 7 years of the 20 years that CS Plus has been in existence, that I've been here anyway, is people that are in nonprofits are acting and becoming more like a business more than ever. There's the mission, the heart, there's what you do as an association, but then there's the business side of it. And in these financially difficult times, obviously COVID-19, obviously due to governments tightening up in the budget and what they make available for nonprofits, having a program to attract donors is more important than ever. And then you have staff and board members. So, how you deal with your staff, having policies and procedures, trying to create risk, management and avoid claims. Insurance is one type of risk management. There's a lot of things you can do on your own end. Board members, how do you operate your board? What kind of a board do you have? How involved are they? Are they showing up and, going through things? They're noted in the minutes, or are they really involved? And it can take a lot of work to ultimately find those sorts of board members, but it's important to, try to do your best and have a board that's truly actively involved. And in case you get sued, there's the insurance aspect of it, which I'll talk about further. But in the meantime, if you get sued, having insurance is very important, obviously, as you will have a professional defense team specific to that potential claim. Claims departments will be contemplating your coverage and that claim, defending you, investigating, seeing if you're liable, ultimately maybe paying a claim if you are liable. So insurance is so important because you'll see where people try to hire their own attorney, and we love attorneys just like our CPAs. They're as good as gold, but they may not specialize in that specific industry, insurance, or let alone the specific insurance matter at hand. Don't know if anybody can hear the train in the background. We are right along the train line, so hopefully that's not distracting anybody. So that's plenty of information for this slide. So moving on to the next one, types of insurance you might need. This may be really familiar to some and not so much to others. If you have coverage, this should be something that you understand on some level. Certainly, if you don't have insurance, this will be very informative. So In any commercial general liability policy, you'll have the 5 line items that you see. Bodily injury, that's the basic 101 of a GL policy. If somebody's attending something and involved in what you host, what you're doing as activities, you have a potential liability. Even if you didn't cause the injury, they sustain a bodily injury, you're probably getting sued. That's just how it works. So that is something that's involved in every policy. Now, property damage, it can be referred to as a few things: premises rented to others coverage. What it does is, if you are renting a space, whether it's your office or some event venue, if you are potentially involved in damage to the building or contents of the owner, there'll be limits available. That $500,000 may vary that you're seeing there, but usually it's a few $100,000 at least. The personal and advertising injury, if you're not in the business of media, publishing, those sorts of things, and you just have some incidental exposures potentially, that's okay. And that's the idea of libel and slander. Anybody could claim that. It's nice to know that that's something that can be contemplated. Products and completed operations doesn't really apply too much to the nonprofit world that you're all in, or a lot of what we deal with, but it is included no matter what. So, imagine you build a product and it is, baby cribs, and there's issues and it's injuring children. You have a product liability. Completed operations, you build decks and there's a max weight available, and ultimately you're well under and things are collapsing and causing injuries. That's some basic concepts there. Medical payments is very important. That involves your no-fault coverage. So fault is always considered when you're talking about the per occurrence limit. That means the $1 million is what you have available, no more than one claim for $1 million total. And general aggregate is your yearly available, limit. So with medical payments, it could be $20,000 or something in that range. That's an amount that's no-fault coverage. In theory, if somebody's injured, they have a high deductible health plan, let's say, and they are looking at a $2,000 amount for a broken arm. If you can pay them quickly, and due to not looking at fault, this part of the claims process moves along much quicker. They're made whole, and maybe they go away and they don't decide to lawyer up and in turn sue, where now pain and suffering and other items, it becomes a whole different situation, much more time consuming and much more of a claim which could have its impact depending on what's paid out. Now, sometimes, depending on what you do, because it's really made for low-risk items, attendees, low-risk activities, medical payments could be excluded. So it's always important to consult with your broker, have a very clear picture of what you do. Is it included or not? If it's not included, you should be considering for those activities a separate medical, accident policy, essentially. So that's an important thing to know. And even if it isn't excluded for your activities, you might want to have it separately so that if you have those sorts of claims, maybe that claim goes against the accident policy, which are generally very cheap in nature, and it never affects your general liability. So that's a key point to note as well. Limits of liability I discussed. Again, $1 million occurrence, no more than one claim. That's what's available, and a $2 million aggregate. That's what you have for the year. So moving on to the next slide, directors and officers coverage. This is a big one, and for what it's worth, knowing the crowd we have on the call here, my parents had bought a small cheap camp in an association in Lake George back in the early 70s, thankfully, when it was affordable. It wouldn't happen today otherwise, so it's a blessing. And I certainly enjoy it. So we have an association. The land is commonly owned by the association, and there's lines obviously drawn. People have their yards, they have their camps, and we have a situation right now where there's a board member who's unhappy with things. And as it turns out, they have general liability, but they don't have directors and officers coverage. This is something I was never involved in. They've always had their own agent. I'm not the actual member, so it really wasn't for me to be involved in anyways. But I think I had brought it up on the beach a few years ago, and I think it fell on deaf ears. So, it's one of these things. The claim can be baseless at the end of the day, I always tell people. But again, you want to have a carrier who can provide a defense. So when you're talking directors and officers coverage, some basic 101 items. You can be sued by a third party for wrongful acts, claiming an error or omission in your capacity as a board member. You need to operate, hopefully, according to your bylaws and articles of incorporation, act ethically, do things in the best interest of the nonprofit. Mismanagement of assets. A donor might claim, hey, you've mismanaged my assets. And that's another important factor. Not crime coverage, that's theft, entirely separate, which we'll get to. But nonetheless, those are some real basic items. And you're thinking to yourself, we've never been sued, we probably never will, right? The past is a good indicator of your future probability. Nonetheless, your time could come. Our time could come, as I explained. I don't think anything will ultimately come of it, but it's just one of those matters you don't know. And for nonprofits like yourselves, you're probably looking at about $700 to $800 or so on average. If you're working with a broker that deals with nonprofits and understands the carriers to go to seek out, quotes. That's pretty competitive and cheap. And I don't want to say it's cheap necessarily for your budget. Your budget is your own, but in the industry, that is a fairly cheap D&O policy. Another thing that D&O will include, or could include and should include rather, is employment practices liability. Things for hiring, firing procedures, discrimination, harassment. It can often extend to third parties as well. You're thinking maybe, oh, I have no employees. Well, the definition of employee includes volunteers. A volunteer could have that sort of claim as well. And overall, we're not seeing a whole ton of these claims when it comes to D&O, but what we are seeing is the employment practices claims. Think about what you see in the news. It's all over. It's a different day and age, and you need to be prepared, and having insurance coverage for that sort of item is very important. Something to know which gives a lot of security to nonprofits is most nonprofit boards, or at least the ones I deal with, and probably yours, are all volunteer. There's something called the Volunteer Protection Act, provides some board immunity potentially. If you're not paid, acting within the scope of your duties, and not grossly negligent in your actions, you will, and I shouldn't go too far with this as I'm not a lawyer, I'm a licensed agent, but you will have it will be harder to hold you personally liable. So don't be too fearful of being on a board. Now, at the same token, don't run too far with this, because you should still be considering having D&O coverage in the event of a lawsuit and your role on that board. You want that professional defense that the carrier provides, and if a claim needs to be paid, maybe it won't come from you because you can't be held personally liable, but you don't want a claim and no coverage and you're liable, let alone defense costs. Even if it's a baseless claim, that can run into the thousands, if not tens of thousands of dollars, depending on the severity of things. Prioritizing directors and officers in commercial general liability. Very simply put, when people come to me with no coverage, I always say you've arrived to the insurance table. These are the two basics of anything available you should be looking at. Some people only want D&O. The majority will want, GL and or D&O. You should really be at least quoting and discussing with the board and considering both. Next slide. Some property-related items. If you own a building, obviously you need to insure that building. You need to think about what's the replacement cost, how to get back to like, kind, and quality at the cost of today's materials per square foot. It's not market value. It's not the assessed value. Nobody cares how nice your yard is or how large it is. It's the quality of the building. So, that can be a discussion that needs to take place and be deeper with your broker. If any of you have owned property now, you'll want to look at your value and you'll want to discuss with your broker, because it might have been a number of years, and now today, who knows where you stand with a proper value. You might want to make an endorsement and increase it by default, just so you're potentially overinsured as opposed to underinsured, which can create a lot of issues. Contents coverage, that could be a part of a property policy. It's referred to as business personal property. I always tell people, do a canvas of your contents, replacement cost value. A computer 5 years ago for $500 is worth next to nothing today, but at replacement cost, it's worth $500. So get a general idea and try to insure those items if you'd like to. It all costs premium, and you want to think about, if you lost all items at once, how would you go about obtaining those again if they were necessary to keep your operation, moving along smoothly? If you can do it on your own, great, and you want to roll the dice and gamble a bit and not have coverage, great. But for $10,000-$20,000 of, some typical business personal property contents coverage, you're probably talking a few $100s or so when it comes to desks, computers, furniture, those things. Business income is an interesting one. Not sure how much it's coming up with, all of you currently, but in light of COVID-19, people are wondering whether or not business income is something that can respond. Where if you have a fire, let's say, and you aren't operating, there can be some compensation potentially from your property policy. They explicitly exclude things due to COVID-19 and other diseases of the like. So ultimately, we're accepting claims on that note. That's our responsibility, and it's up to the carriers to decide. There's a lot of turmoil out there and people challenging coverage forms. Just wanted to make a little note of that, as some of you may be actively involved in something to that effect, or you may have heard of it, or this could be the first time and it could be of some interest. Deductibles and retention, and this is something that could be related to property, but is mostly related to D&O. A deductible is similar to your deductible in car insurance. If you rear-end somebody, you're at fault, you pay your $500 deductible, the carrier pays thereafter. That's what you're responsible for. With retention, it could be loss only, where they may defend you, but unless a loss unless you're liable for the loss and they actually have to pay, you would not owe your retention. So they can defend you for $10,000 and they find out you're not liable, you'll never owe your $1,000 retention. But if it is found that you are liable, you then, just like the deductible at that point, would have to pay the $1,000 before they pay. Replacement costs, I discussed that. Co-insurance rules. Most property policies have a co-insurance clause of 80%. What it means is, consider a building worth, $100,000, to make simple math for everybody. You need to be insured for at least what is 80% to that total value, thus $80,000. If you're under it, you'll have penalties that will apply in the event of a partial or total loss. So it's always good to try to up your value a little bit. In any case, it doesn't add that much additional premium if you up it a certain amount. It's always something to think about. You always want to be ahead of that 80% curve. And the carrier views it as, if we're, paying up to that total limit, we need to garner certain premiums. So long as you're insured to at least what is, at the end of the day, when there's a loss, 80% of that total value, we will contemplate paying you up to your total value of $100,000, even if you only had, so long as you're, again, at 80%. Now, flood insurance is a whole different beast in this insurance world. If you're in a floodplain, that's something that can be determined with your broker. They can assist you with obtaining coverage. You may insure the basement, and you may insure the contents in the basement. You may additionally insure the basement contents and the first floor. You have a flood, and those floodwaters have a tendency to work their way up. And you may not have the floodwaters go above the first floor, but the saturation in the walls can create issues on the first floor. So I'm going to keep that very basic and leave it at that, but it's a different piece of the industry and something you want to consult with your broker on. Auto coverage. There's something called hired and non-owned auto coverage. If you're involved in having employees or volunteers at your direction use their vehicle, you could have liability because they're using it for work purposes. So, for instance, you're running an errand, getting mail, and you hit a third party, a pedestrian, somebody in another vehicle. That means you're at fault. Let's assume you're at fault. Your personal auto liability, State Farm, what have you, Geico, is primary. This coverage acts as excess to protect the entity only for their negligence for bodily injuries to the third party. So if the personal auto doesn't make them whole, you may be on the hook for compensation potentially, and this $1 million of excess coverage protects the entity. Nothing to do with damage to vehicles, property, or the driver itself. Those are separate items. There's also owned auto. If you own, obviously a vehicle, you need to have that, insured. And if you own it, you should have it registered, entitled, owned by the nonprofit, and insuring it properly that way. You'll have liability coverages, and you'll have physical damage. This is probably somewhat familiar, I'm sure, from personal auto, so I'm not going to spend too much time there. Some other coverages that are really important in the nonprofit world: professional liability. If you're the expert in something, so where we might have potentially some associations involved in the environmental aspects of the lake, testing water samples, that's what we're set up for. We work with third parties, they give us funding, and we are out there promoting the betterment of these beautiful lakes around New York State. You absolutely may have a professional liability exposure, and you could have a situation with a claim where the commercial general liability policy does not cover that claim. Whether it's, hey, you made an error of omission in your work and I've lost money from working with you, your intended outcome didn't work as you billed, or there was an injury, and based on the professional service you give, it's that which would contemplate that potential claim, but not general liability. I always like to use a real simple example. Think of a daycare. You're a professional. If a baby's injured in your care, the general liability isn't generally what will respond, it's the professional liability. Improper sexual conduct, abuse. That may not be too applicable here, but you have to also consider, though, these associations, and in regards to like what I referenced with mine, or where you have a common road, or maybe you have a beach that you all own commonly. It is something to think about and discuss variables with your broker. You could have a situation and somebody could claim that you were negligent for that. It's not something we all typically think of, but if somebody sued, it could be baseless. That's great, but where's your defense cost coming from? The GL won't defend you unless you have this coverage. So important to be thinking about, discussing with your broker, and all of these things are a matter of risk, value, and premium. Always good to get a quote, have risk, value, premium in mind, discuss it with the board, and if the board decides, hey, we're going to get it in the minutes that we understand it, but we're not going to purchase it, that's great. There's a record of that. Down the road, if there is a claim, people will understand why they didn't have the coverage, as opposed to now pointing fingers because, oh, I thought we had this coverage. Oh, we don't. We never have had it. We never discussed it. So it's good to get in tune and really start thinking about things above and beyond a simple injury or a claim against your board. Umbrella liability is an interesting one. So we talked earlier with GL, $1 million occurrence, $2 million annual aggregate. You may have a situation where a funder, or simply to have some additional limits available, you may purchase an umbrella for $1 million. Depending on the carrier, I have one that pretty consistently is around $600-700. They may run as much as $1,000. That's usually about the norm unless you have some really high risk considerations. So it's excess liability. So if you have $1 million umbrella as excess and your primary limit is $1 million occurrence and $2 million aggregate, what you have potentially for the year is $2 million per one claim and a $3 million annual aggregate. An umbrella is important consideration, may not fit with your budget, but again, risk, value, premium, it's something you should be thinking of and discussing. $1 million is certainly still $1 million, though. It's not what it used to be, but often that is enough to settle and support a claim, but you never know. Some other coverages you may want to think about. I'm not going to dive into too much detail here, but there's crime coverages. That can be credit card fraud, misuse of it, check fraud by an employee or volunteer potentially, employee dishonesty, crime coverage part 1, theft of cash, property, securities. You may not have a whole lot of cash on hand. You may not be too concerned with that, but it's a discussion to have with your broker. Some funders may require a fidelity bond. We want to know that there's a fidelity bond for theft because we gave you a lot of money and you've got your treasurer involved in dealing with that money. So that one gets pretty specific, and that's again a good discussion to have if it's necessary with your broker. Business interruption and extra expense, that's an aspect I touched on briefly before. Again, if you have a fire or some sort of loss, you can't operate, you have business interruption, you may not have, your typical funds coming in because of that. There could be compensation for that. Extra expense, such as maybe payroll while you're not operating, could be a consideration. Cyber liability, if you have donations, period, end, stop, I like to say, even if it's a third party, a PayPal or whatever, you still have liability. There's notification expenses if there's a breach. If a third party, from that data that you hold has a loss, you may need compensation. There's a multitude of other factors to do with cyber liability, which are very important. Fiduciary liability, I don't think anybody here has, retirement plans. If anybody does, if there's a loss of dollars in those plans, employees could claim that you have some responsibility as the fiduciary and the administrator of it. Maybe there wasn't enough selection, what have you, and that's why there was a loss of dollars. That can be something that's important. Employee benefits liability, if you offer health benefits, if you miss an enrollment form, somebody has a claim, and you're past the point of being able to retroactively make the coverage effective as of their eligibility date, this is something that may respond to that. Accident coverage, I touched on that before. Having separate accident coverage is no fault is important and often cheap. Builder's risk. You have a traditional building, it's insured, it stays where it is, it's occupied, it's that replacement cost value. If you do work to it, however little the maintenance might be, rebuilding a kitchen, to knocking out a side, or to build an addition, or you're building something entirely new, that's a different coverage form than your standard property policy. It's builder's risk. They insure the total value of the completed job, let's say $200,000. You don't build it in increments, and if you have a loss at any point, it can respond to that. So it's very important that you are in touch with your broker, because you should get from a contractor always a certificate of insurance for general liability, workers' comp, showing them as additional insured. The underwriters will probably want to see that, if not require it. And then they'll tell you, based on the work being done, a roof, a kitchen, what have you, or lower risk items, maybe they're okay with that in consideration of the contractor having their own coverages. But nonetheless, you're going to need to be in a position to work with your underwriter and have them tell you if you're good based on your current coverage, or if you need to obtain builder's risk coverage. Managing your insurance, understanding your policy. So some basics here: declarations page, overview of the named insured, effective dates, coverage limits, liability, and price. Everybody should be well aware of what that is. There's definitions. Terms referenced in the policy are more clearly defined. What's the definition of an employee? It probably includes volunteers. Something to be aware of. Another one is, who's the insured? Insureds are the entity, employees, and volunteers. That's, an absolute when it typically comes to general liability and directors and officers coverage. If you're scanning your policy, you don't have to get into all the legalese of the coverage documents, but it's important to have some ideas at least. Other items, insuring agreements. This is where the insurer describes what the policy will cover. That's your coverage forms. If you ever want to do a brief review with your broker so you have at least some understanding, I know it's scary, most people don't look at it, but it might be good to have a basic understanding. Conditions, they outline the duties of the insured and insurer and how policy will respond, such as if there's an audit of your property, what rights you have. Conditions will be a multitude of things, which again are something you should be reviewing with your broker. Endorsements and exclusions. There's common pages that are part of every policy as required in New York State, put out by the Insurance Services Office. That's many pages in your policy. If you look, you'll see that. Know that that's the majority of policies. But endorsements, you may have carrier endorsements. It's good to see what flavor and feel they add and what the applicability is and how it may help you. You could have exclusions, typical exclusions, fireworks. If you don't have abuse coverage, it's excluded. But it's important to know from your broker, are there any exclusions that are specific to your operation that the underwriter is specifically saying, hey, we are not covering this, it's excluded. You need to be in touch and be informed. Certificates of insurance, very important items. In its purest form, a COI only conveys the existence of coverage as of the date of the certificate. So it's important to be working with your broker and making sure that they know what activities you have and that these items are contemplated. Sometimes an entity will ask for not only the proof, but to be insured with you. This could involve being an insured on your policy. You'll have to work with your broker for that endorsement. Some entities not only require the COI, noting them as additional insured, but again, like I said, they may want to be listed on the policy, and that's important to be involved in and working with your broker on. Next slide. Regarding this piece, there's a lot of additional insureds. This is one fairly common example. There's other ones. These are involved in your policies generally already, and some policies don't. You could get charged for it, so you have to work with your broker again. But what you're dealing with is if your policy contemplates certain activities, certain things you do, that's great. From there, your broker can say, oh, you have a certificate of insurance request? Yes, it's for this activity. We've already got this event contemplated and charged for. We'll go ahead and proceed with the certificate of insurance. You don't get charged for the certificate of insurance. You get charged for when you come to your broker and you have something that they run by underwriting that may not be excluded, but they want to charge for because it's a new exposure, or it's excluded, and to have coverage, they are going to charge for it. Next slide, claims, incidents, accidents. While it is sometimes clear when you need to notify your broker carrier of a claim, sometimes it is not. A basic scratch because someone fell in the parking lot and their knees banged up, they're like, oh, I'm great. Who knows? Probably unlikely, but they could have an infection later on and you could see a claim afterwards. It's always good to put the carrier on notice. Putting a carrier on notice regarding incidents should not affect your premium unless there's a lot of consistency and there's something that you may be doing to contribute to those injuries. But ultimately, an incident here and there, always great practice to make the broker known, put them on notice. It's up to them if they put the underwriter on notice. They certainly should. And then if you have a claim, the underwriter already is in a position to understand what it's about. They're not coming into it with a total surprise. Next slide. Rating basis, very important. I tell all my customers when I go over an application, which I'm very thorough and detailed on, you'll learn more about that with me if we connect one-on-one, is you want to convey everything you do in a 12-month period. The underwriter needs to contemplate everything you may have a claim for. You're charged for things accordingly. Your rating basis are class codes, and they will rate for things that you're involved in. You should know what that is. You should be very aware of your original application. If things change, you'll want to be in touch with your broker and be able to know, hey, I never accounted for this. I don't think it's excluded, but I know it's new and we should discuss it. And now the broker's on notice. Always want to have a record of things with your broker. One common exposure could be square footage. If you have an office, 300 square feet, you have a premises liability exposure, they'll rate for it. So like I said, knowing your rating basis and notifying your broker if it changes is important, whether substantially or not. Always be transparent and in touch with your broker. Better to have a small premium charge for something than have it be excluded thinking it wasn't the case, and now you have a $50,000 claim and it's too late to do anything. Special events or fundraisers. Again, there's typical ones, barbecue, fundraising with some donors, pretty basic things that may already be covered under your endorsements, fundraiser, portion of your policy, but you want to, again, be in tune with what you have going on and being in communication with your broker. So looking at this endorsement, and this can be a little bit different for every carrier, but these things are explicitly excluded. There is no coverage. So don't run with this. There could be other items that aren't included and are excluded. So if your broker wasn't originally aware of it and it's not endorsed and charged for, you again should play it safe and give your broker notice and be having these discussions. A lot of different activities going on in a camp association. It's probably been years that you've updated your broker or talked about it. Now is the time, if you have coverage, to consider going through these things. Or if you don't have coverage, talking to your broker about the applicability of coverage and what you should be thinking. Working with brokers in the industry. So, insurance is a tough industry, right? People get denied for claims. We all have to work to try to make it better. We do that here at Counsel Services Plus. We work diligently with servicing and having discussions with our clients, whether it's a $600 GL policy or a $500,000 premium for health benefits. We're going to give the same time to the small client or the big client, and we're client centered first. We're not going to take time out of what you need because we're chasing the next big fish. We're different. That's not how it works. Hopefully you get that same feeling from your broker, and you are going to easily feel comfortable in having conversations. Meaning, everything I discussed before is being transparent, making them aware of what's going on, being dedicated to that process, being in communication, being aware of everybody's time. If you have an event coming up that you've known of for 2 months, try not to contact your broker and 3 days to spare to try to get a hold of underwriting because maybe it's excluded. You should try to always give 2 weeks to a month if possible. Qualities of a good client, inclusion. That means you're including your broker. We can, as brokers, with all our clients, reach out on an individual basis all the time. You have to see, a renewal policy, and you might want to reach out and say, hey, it's been a couple of years that I touched base with you. I want to discuss this and read it with you a bit and go over some things and see what we should be doing. Don't just say, oh, it renewed with practically no increase, great, move along and get to the next item. So, inclusion and understanding it and communicating, very, very important parts in working with your broker. You want to have a working relationship, and you want to avoid surprises after when there's a claim. That's when it all matters. So these things are important beforehand. Working with brokers and the industry protocols. If you have a broker and you like that broker, they probably work with more than one carrier. Go ahead and work with that one broker. If it's me or any other broker in the state, do what you're comfortable with, what you think is best for you. Don't go and seek out numerous brokers at once. There can be a reason for that. That's fine. If you have a bid process or you do want to involve another broker just in general, go for it. Great. But let your broker know that if it's the incumbent broker, for instance, and let the brokers decide, especially your incumbent broker, which carriers they'll have access to. Carriers work on a first-come, first-served basis. So if you're going to compare at a renewal, let your broker know, hey, I want access to these 3 carriers. Your broker will tell you who they want access to. And then if you go to other brokers, make sure each broker is segmenting who they go to, and we're not stepping on each other's feet because it's redundant and it wastes time and it doesn't make for a good process. So something to think about. Some carriers, when it comes to quoting, won't offer a midterm quote. It just depends. So you generally want to be, a couple months out or so, depending on how much information an underwriter needs to review, how much you do, your risk, all those things. There's a process to application, so give plenty of notice before renewal if you plan to shop. And realize your broker is probably going to renew you every year if you have little change in premium. All premiums are going up. So, if it's held steady for a number of years, you probably want to stick with your current broker, and that carrier is probably a good broker. But if things change by a certain percentage, we like to try to consider 10% or more or around there. That's a good time that the broker should reach out and see where you're at and if you want to consider shopping. If it's a small percentage point increase, other carriers' rates go up each year too. You may not want to spend the time. A good conversation to have with the broker, though. Many carriers, as noted, won't quote if you're 90 days prior to your renewal. And many carriers have, some sort of minimum premium thresholds they'll charge. So regardless of how low your risk is, I see people, I wish we would charge, the industry, the carriers, $200-$300 would be profitable, but nonetheless, some people really do have very, very low risk. But you're probably, for any kind of insurance, spending a few $100s at least. Unless it's something really simple like an accident policy or a crime policy with a couple parts, you may just be looking at $100, $200 or so. That's a possibility. So thank you all very much for your time today. I hope the pace was reasonable. I needed to keep it moving with the time allotted, and most importantly, to allow for some questions to be answered. I know some people have posted some things. I know previously people were asking about some accident coverage for their volunteers, people out in boats. That's a high-risk item. That medical payments item for the GL I discussed, that would be excluded for those activities. You would need to work with a broker to seek out accident coverage that, is no-fault coverage and contemplates those sorts of things. That's a little bit more of a specialty item, but people should be able to assist. People had asked about D&O coverage. I think I've done plenty there. Always feel free to follow up again. We can talk one-on-one. There's a couple of questions about dam exposures. That's a little bit more involved and specific and higher risk. I don't want to do anything now because it's time consuming and it's not really the place. But again, very happy to have somebody reach out to me. And I do hope to hear from those people and have some conversations and be able to contemplate, what might be a good course of action. I know somebody took a big increase because their carrier dropped them. Sometimes carriers no longer decide to be in the nonprofit world and they no longer insure you. And now you go to a new carrier and you see a big premium increase. Happy to chat, look at what you had, see what you're doing now, and discuss potential options that maybe I can offer that are better for you. Feel free to reach out. Happy to chat. Savannah, I believe at this time you were going to discuss some other potential questions and things that came about from people on the call.
Yes, so we have received a ton of questions throughout your presentation. So I do just want to reiterate to everybody on the call that if your question is not able to be answered live today, we will be able to follow up with you via email. Everything has been saved and Brian will be able to get those questions answered. So I'm just going to jump right in because we have a lot of questions. So the first question that we received, an attendee asked, is it possible to form a consortium of lake associations to garner a good policy for liability that is less expensive than individual policies, but still protects our nonprofits and their boards appropriately? And if so, is there a discount that could be associated with this?
Yes, so great question. I hear that a lot of times in regards to health insurance and finding yourself with a bunch of small groups. Now you're a large group. Can we get a better rate that way? I hear it in other aspects. This is a question I'm familiar with. The bottom line is you can try. If you can find a broker that has a specialty or expertise in doing that, great. I don't think you will, though. The problem you run into is everybody has different risk exposures, and at the end of the day, you're all separate entities. You are incorporated as a nonprofit. You have your own federal employer identification number. It makes it very difficult, and carriers are going to look to view you as a one-off basis generally and quote and contemplate and rate for your specifics. Certainly if you have, let's say, a subsidiary, or you're in a fiscal sponsor type situation where, let's say you're a 501c3, and because you're a fiscal sponsor, someone else who receives donations is incorporated a nonprofit but doesn't have their IRS 501c3 determination, they can work with you as fiscal sponsor, and their donations can in turn be tax, deductible, so or not taxed. So ultimately, that's a consideration, but maybe if you have some kind of member situation where we're unincorporated groups, but we're at your direction, that could be a consideration. But taking individual FEIN numbers, federal employer identification numbers, and putting people together in a consortium of sense and having it be less expensive, unfortunately, it probably won't happen. But a great question.
Perfect. So on to the next one. An attendee asked, this might be a quick one, can property also be defined as space rented or shared at no cost to the organization?
Yeah, great question. So obviously, if you're renting from somebody, you have the property applicabilities. I said your contents, your liability exposure. If, let's say, it's an in-kind situation, you're a nonprofit, and another nonprofit says you can use our space. That's the same concept as renting. Or if it's a shared space, even if there's no dollars exchanged, there's still a premises exposure, and quote unquote, it's renting regardless of what you call it. One thing that's important is somebody in a shared space, the bigger nonprofit may say, hey, you're covered under our policy. That's all fine and well, but you can't depend on that. You really want to have your own coverage, even though somebody else may add you. You want to be the named insured. You want to have the control. You want to be able to work with your broker. that's something you should think about. Now, certainly if somebody thinks they can add you to their policy, that's great, but what kind of confidence are you getting from that? Are you a named insured on that policy? Are they sharing any documents with you? What involvement? And again, confidence, comfortability, details are they providing? Be cautious. Great question.
Perfect. And so another attendee asked, what concerns are there about associations where owners rent properties on VRBO, etc.?
Did you say BRBO?
V as in Viper, R as in robot, B as in boy.
BRB. Why is that not ringing the bell? What that stands for?
No worries. If that attendee that answered that asked that question, if you could just submit right now in the question box, if you have a moment to let us know, we could clarify that question with you offline. So on to the next one. An attendee asked how to find a broker that is familiar with lake clubs that has also managed their own dam.
Yeah, sure. So, you can do specific searches online looking for that and see if a broker is promoting themselves in those arenas. You can contact your local broker and start there. They may not have an option. They may send you elsewhere. You can contact someone like us who deals with nonprofits. But ultimately, at the end of the day, you're just going to have to put some work in when you have higher risk items. You may go to brokers that just don't have an understanding. I can tell you personally, we don't deal with any dam situations, but I know we have carriers that deal with nonprofits, know their risks. I suspect it might be something that we can have an option for. We have some higher risk markets, so that's why with a one-on-one chat, your broker understands better what's going on, and even if it's not their specialty or they don't insure it, they may have options, and that's okay if they don't necessarily have it as a primary part of their business. Frankly, making money off of just insuring dams is probably a tough business to be in. So it's probably few and far in between that you'll find that. But yeah, start with your local broker. Start with somebody else that you've heard of out there, and just get that conversation going and see where the direction is you need to go next. But again, maybe start with one broker before you start with throwing three into the den.
Perfect. So I did get a response for the last question. So what concerns are there about associations where owners rent properties on vacation rental properties, like an Airbnb?
Yes. So, my understanding of Airbnb, I'm not 100%, but I think a part of your cost of renting an Airbnb is that it does include some insurance in consideration, I believe, to do with liability and property damage. You should be specific, with Airbnb and that contract you're signing and agreeing to, and finding out explicitly what does it involve. Know it. You're probably one in a million of having a chance, just like you all are as nonprofits with your activities in general, but who knows, right? And you want to be in a position where if you have a claim, you know what your coverage was very well. Also, depending on what that coverage is or isn't, you can look to event policies for one-day policies. You could just be a general group of people as a family renting, or you could be, renting in an association setting with an Airbnb type, platform, and you can get a one-time event policy that will provide $1 million of liability, will provide property damage. You could be secured in having your own coverage and working with a broker and knowing what that is.
Perfect. So we also had a question. An attendee asked, for lake associations that own a dam, is there any specific insurance for dam coverage or issues related to dam failures?
Right. So yeah, again, feel free to reach out to me one-on-one. I'll get details and bring it out to, various underwriters and start to get an idea of what I might be able to do for you from there.
Perfect. All the attendees that have submitted specific questions, we will definitely be following up with you. We have all that contact information.
Great. I know we're at 11 o'clock here. If anybody can hold the line for a moment, appreciate it. One thing I wanted to kind of note here, and again, having some specific knowledge of the inner workings of these association settings, whether it's a common road, whether it's a common road and or beach access, or like my association, there's the private roads, the gravel private roads. There's the land itself that the members own cumulatively, the association. There's the beach. People have docks. I know we have a history often of where these docks, people bought them, and you have members, and each member, you have a few members per dock, right? They own the dock. The association doesn't own the dock, but you've got kids running around those docks. Does the boat insurance, if somebody slips and falls, does your boat insurance do anything in regards to responding to that claim in terms of the individual member? If the dock is owned by the members, can your general liability potentially, contemplate anything to do with that coverage? It's still attached to the association beach. That could create an issue. These are very specific matters that you'll want to be in touch with. We went through it, and the end result was they didn't get too far. It was complex, and I think they found it challenging and left it alone. So ultimately kind of a conflict of interest. I probably won't get involved in their insurance, but I've tried to guide them. And, one thing that did come of it from my, advice was, contact your homeowner's policy and contact your boat insurance policy and see, can they extend any coverage to you? And can they name the association on your policy? That's a consideration, and it's a big discussion at a board meeting. It's going to be confusing. It's really something people should think about. You probably never have had a claim, but it's water. What if somebody drowns and somebody dies? Not to paint a dark picture to end this, but this is where it's serious and it matters. It's never happened, but it has happened to others. It could happen to you. These are really challenging things, and I would strongly suggest having a board meeting around insurance. Get the policies reviewed beforehand, know what you have, discuss them with the board members, discuss other exposures, and just have that discussion. Look at the angles, look at the risks, and think, we've probably never visited this in a long time. Maybe we should now call our broker since we've had a proper discussion. Something really important to think about. So, thank you all again for your time. Thank you, Savannah. Thank you, to Environmental Finance Center of Syracuse University, Ms. Fola, and for all of your time and patience today. Again, I hope you found this, informative and helpful, and very happy to chat. Use me, even if you don't want to come to me for a quote. Come to me to have a discussion. That's what we're here for. That's a part of our mission. That's why we're established. Happy to chat for, 10, 20, 30 minutes and give you some direction, bounce something off of me that you might have already had per discussion with your broker. That's great. You don't have to come to me and say, I'm ready for an application.
Thank you so much, Brian, for being here today to provide your expertise. All the folks on the line, we hope you have a great afternoon. You will be receiving follow-up emails with links to an evaluation survey if you have a few moments to let us know about your thoughts. So again, Brian, thank you so much for being here, and we will definitely be in touch with all those remaining questions.
Great. You're welcome, Savannah. Thank you again, and thank you all, and have a nice day.
Have a good one, everyone.
Bye-bye.